Are you worried about today's dire financial situation?
Put simply, I would argue the Biden economic plan is working.
The storms on Wall Street continue today after regulators seized the assets of Silicon Valley Bank, marking the largest bank failure since the 2008 financial crisis.
Do you worry you'll have enough to pay your mortgage, pay your children's college tuition, enough to retire?
I believe our banking system remains strong.
Regional banks in focus once again today as the market digests the fallout of the First Republic failure.
You have questions, we have answers. It's the gold standard with Ken Russo and Jennifer Horn.
Yes, it is, and we thank you for joining us on another edition of the Gold Standard Radio Show. Ken Russo, Jennifer Horn, back together again. Hi, Ken.
Hi, Jen.
That's how we scripted
Hi, Jen
it.
Horn.
Hi, Ken Russo.
Yes.
Well, today's episode is called Inflation Busters, and I think we should kind of peel back the layers of the onion, let people into what happens behind the scenes. You called me and said, you know what? A lot going on, Jen. Today, you take the reins. And I said, oh, Ken.
Yeah, I need you to walk me through this today,
You're like,
Jen.
gladly, because if you've noticed, and maybe some of you have, we just finished up having the Republican National Convention. We are currently finishing up now the Democrat National Convention. So both conventions in the book. And inflation, the I word, seems to be on the lips of every politician. And I thought, you know what?
The bad orange man and cackling Kamala are going to tackle inflation, huh?
That's what they've been
Okay.
talking about. So I thought we could go through some of the items, and you can tell me if they are going to bust or increase inflation. How about that?
Oh, okay.
And then maybe we could talk about some strategies to beat inflation. Of course, we're talking about gold and silver, which historically over time have held their value better than the dollar.
Well,
So
all of our smart listeners, Jen, they know that inflation is basically the devaluation of our dollar, right?
right.
So as the dollar falls, prices rise.
easy.
As the purchasing power of our dollar falls, prices rise.
It goes up.
There you go.
It's
So
like our little economics 101 today.
that's right. This should be simple.
Well,
so
you know,
for anyone listening out there that's saying, "Wow, this dollar is, it's really losing a lot of value, and it's not really that safe. It's actually like monopoly money."
Yep.
What could I do? Well, one thing that you can do historically is to convert some of those dwindling dollars into tangible assets, and the asset that we like and prefer is gold. Silver as well, but
it means
especially
something.
gold.
Yeah,
Well,
you
it's-
hold
it's-
on to it. We've known it. It's been here forever.
Well, it stood the test of time.
Yeah.
Even 4 years ago. Okay. What was the price of gold about 4 years ago? Probably between 1,700, 1,800,
And we're at about 20.
2,500.
I was going to say 24, but that's good. Okay, so here we go.
So you're talking like a 40% return plus.
Mm-hmm.
So if your dollar has lost money or has lost value over
Right.
the last 4 or 5 years, which it has, and if prices have increased due to whatever, they can say COVID, or you're going to go over some possible reasons, gold has made up for those losses.
Absolutely.
So that is what's happening. Our dollar is dwindling, and the price of gold is reflecting that at a higher price. That's exactly what's happening. And a frequent question today, Jen, is, well, gold is at an all-time high around 2,500. Is it too high?
Right.
And that may be something that we may want to, touch on as well, which I can definitely comment on, and maybe even producer Mike would like to comment on that as well.
All right. Well, look
Yeah.
at that. I didn't. There's going to be a pop quiz later. I like it. But first, before we jump into the meat of the program,
Another special surprise.
another special surprise. Now, typically, and this is big, we go to Mama Cleo. Call me now. She's in the big house now, or maybe she.
Yeah, I
has
don't know who
passed
that
on.
is.
You don't know who Mama Cleo
What's
is?
that? Like a
She was a good telephone psychic. And
Oh, yeah, okay,
she was
yeah.
I don't know what she did,
Yeah.
but she used to say, "Call me now," and like she was from
And made
Brooklyn.
millions.
She was not Jamaican. She was, it was the whole thing. But anyway, she made millions. She had a plan. Didn't end well for her, but she had a plan for a while. And typically, we look into that crystal ball, and somehow we get the spirit of the great Richard Milhouse Nixon.
Oh, yeah.
How did we get into this situation where we are today? And poof, out of nowhere, Richard Nixon appears.
He does.
And he says,
Let's convert that dollar into fiat.
now, today's a very
Fiat
special
money.
day.
Let's print money. 500, 150. Let's just print it.
Print away.
And why could we print? because in 1971,
Backed by nothing anymore, right?
right,
We don't have gold.
They stripped the dollar of its, gold standard status.
It used to be convertible.
It used to be backed by a certain amount of gold. If there was a certain amount of money that the government was going to print, they had to have a certain amount of gold to back that up.
Seems reasonable.
Well, it promotes a balanced budget. It promotes being fiscally responsible.
The what?
Fiscally responsible.
Oh, I'm sorry. I wasn't familiar with those words used together.
The easy way to look at it is since 1971, the floodgates have opened. So the dollar has lost significant value. We've gone over this many times. $1 from 1971 is now worth about 15 cents.
Yeah.
And on the other hand, if you had $1 of gold in 1971, you have $70 worth of gold. That's a big difference.
That's a big difference.
It's a
and I
huge
know where
difference.
you want to be. You want to be with the gold, not the dollars.
Right. And this is not a great stock. Gold is not a great piece of real estate. It's different. Think of it as money. And if you think of your paper money as a investment, that if you hold in an account and based on its security, based on its privacy, but more importantly, based on its return and its dwindling value, cash is a very bad investment.
Yeah.
It's a good convenient thing to have because obviously sometimes you need it for bills and living expenses and that sort of thing. But if you compare that to a tangible asset like gold, the return, it's not even close. But the banking system doesn't have any real incentive to promote physical gold. Advisors really don't have any, incentive to promote something that's a tangible asset where you can't really trade it around and, make different fees or commissions on that by switching it from one asset to another, stocks to bonds to money markets to CDs to annuities, and, to common stock and to ETFs. And let's just keep spinning it around. That's what they do. But the gold market is very important, Jen, because first of all, it's doing great. It's making up for inflation, which is what we are talking about today, inflation busters. So one of the things that you can do to protect yourself from inflation or a dwindling dollar is to own gold and to convert some of those assets into gold while you still can. That may be, a bank account, or it might be a IRA, it might be an old 401k. But the reasons that we're talking about are going to continue. They're going to get worse no matter who takes over our, White House presidency in November, because they're all going to spend a lot of money. They're all going to take on a lot of debt. They're all going to try to save the world one way or another. And it's all based on fake money.
That we don't have.
We don't have enough that we bring in based on taxes and other revenues. So where does that difference, how is it made up? And that difference is through deficit spending.
Firing up the printing press.
Right. Borrowing. It's through spending a lot more money that we have. So we're sacrificing our future for now. We're just kicking the can down the road. And this is making the whole system much more dangerous. It's a big bubble. And the question is when this bubble finally pops, which it will, what are you going to have left? And that's where gold comes into play.
Absolutely. And so let's dig into that, because this week we have the Democrat National Convention in town. We finally have economic policy plans from Kamala Harris. She released those about a week ago.
You're kidding.
I know. Imagine that. It was done in crayon, so it was
Okay.
nice. No, just teasing. In her plans, she said that the inflation is real.
Okay.
People are feeling it. She said particularly people at the grocery store are feeling it. They're feeling it in the everyday items, right? They're feeling it in eggs, in chicken, in produce, all of that. So she's decided that her idea is going to be grocery regulation.
Grocery regulation. You know what's really scarier than that?
Tell me.
She actually has a chance
Yeah.
to win.
I know.
Yeah. So it's it's a real situation where we'll have to see what happens. But prepare to be buckled in. But grocery, what does she call it?
It's a grocery store regulation, basically.
Grocery
government
store regulation.
Government regulation over grocery store prices. Now, the problem is the grocery industry is an industry that has about a 1% to a 1.5% profit margin. So what happens when you go and you start telling people how much they can charge for things that people use every single day?
Yeah.
Well, those grocery stores are probably going to go out of business. They're also talking about raising the minimum wage, which also creates a problem for the grocery stores. And then the next thing you know, Ken, do we have like government issued bread? I mean, are we seeing colors of like the Maduro plan wandering around? Because this is what socialism starts to look like when you start to talk about government regulation of grocery stores.
Yeah, that would be a good conclusion. That's what I would agree with. And obviously not an American way that's supported by the Constitution as the great republic that we should be. But I mean, what do you expect? I mean, that's where we're headed if a certain agenda is promoted. Yeah. So unless we have people that can come on in and support our great country the way that it should be, and independence and entrepreneurship and real growth and that sort of thing, and a real strong economy, we're going to have to lean on these agendas. These agendas are going to have to be supported by fake money, and that fake money is just going to put a fire under prices. Prices are going to increase dramatically, and whoever they want to blame, big greedy corporations, whatever, it's all nonsense. They don't know what they're doing. Yeah. And that just supports the theory that eventually this big bubble is going to really spiral out of control. And based on whoever's elected, maybe that spiral will happen a lot sooner rather than if somebody else was. Yeah, there's another plan that was revealed, and this isn't just pick on the Democrats, because believe us, when we say, look, I'll be voting for Trump. I'm very honest about that. I'm a Republican. But I will tell you that both Republicans and Democrats have big problems when it comes to spending. No one is serious about balancing the budget. And quite honestly, we're probably too far gone to even do that because of this bubble that you've talked about with all the spending. Well, a little over 2,000, right? I mean, the deficit was like $5 trillion. Now we're over $35 trillion. Right. So everybody has had a hand in that. And the question is how is this going to be fixed? Or how is it going to unravel? Yeah. Okay, and you got to protect yourself from it possibly unraveling. And the easiest way to do that is to diversify, and the easiest way to do that is to be in a tangible asset. And when this all plays out, it's a lot easier to kind of just stay intact, and we'll see what happens, and we'll be able to enter the new financial system when that comes about. We're going to go through a couple more of these ideas from these politicians over the last couple of months about things to try to help. And I'll put air quotes around that, all of us in our financial situation. But is that really going to help inflation? Is that going to make it any better? And what can you do to protect yourself? Plus, we'll talk about just how high the price of gold is. Is it too high to buy? That's as the Gold Standard Radio Show continues. And don't forget, if you're interested in adding gold and silver to your portfolio to protect yourself against all of this government craziness and the spending, call Midas Gold Group today, 855-322-GOLD, 855-322-4653, 855-322-GOLD, or MidasGoldGroup.com. It's a Gold Standard Radio Show with Ken Russo and Jennifer Horn.
Dr. Gorka here. You're listening to The Gold Standard with your hosts, Ken Russo from veteran-owned Midas Gold Group and Jennifer Horn. Owning private money in the form of physical gold and silver is perhaps more important than ever to your long-term financial security. As U.S. banks fail, the Biden administration sends hundreds of billions abroad while depleting our strategic oil reserves. However, the biggest financial threat may be coming from within: central bank digital currency. The patents have been filed and the big banks have released plans for implementation. Midas Gold Group sees tyrannical implications: the end of cash, the end of financial privacy, big government able to see your every purchase. Could there be ties to social credit? Hear more commentary on the political and economic issues that affect your financial security right here on the Gold Standard. You can create your own Gold Standard with a call to Midas Gold Group, 855-322-GOLD. That's 855-322-4653, MidasGoldGroup.com.
Welcome back. It is a Gold Standard Radio Show. Ken Russo, Jennifer Horn back together again, and we are so glad you are with us. Ken, we were chatting, and before we jump back into the serious stuff, you know, I know we have a lot going on. There's a lot of news, but you promised me a surprise today that we did not get to in our first segment, and that is typically...
What was that?
We talk to Richard Nixon during every show. You promised me today we were going to hear from Pat Nixon, and doggone it, I'm not letting you
I thought you were going to do it.
Richard!
Yeah. Dick, let's get the fiat money going, Dick. I don't know, does she even sound like that? I don't even know.
Knows.
Was that Bart Simpson's wife?
No, that is very Marge-like.
Yeah,
You're
right, yeah.
Well, there is a new book. I just interviewed the author, actually, who says that Pat Nixon was the most mysterious first lady. So maybe that's why we don't know what she sounds like.
Yeah, I don't know. Yeah, could be. I'm not sure.
We do have a special guest here of the Nixon family as well. We have Checkers in the studio right now.
Oh, hi, Checkers. Do you like fiat currency? Checkers?
No. Gold standard.
Yeah.
We've all lost
fiat
our
money
minds.
buys Checkers his bones and his food, and and takes him to the vet. When you go to the vet and there's a problem with the pet, you're talking. You
Big
can
time.
get into the thousands of dollars.
Boy, they see
pretty
you
easy.
coming. They're like, "Oh, that guy loves his dog.
Ooh.
Turn it up. Turn
Yeah.
it up." All right. So enough silliness.
My cat.
Oh no.
Last year, I still can't get over this.
How much was it again?
My cat had an respiratory, problem. Yeah,
Your
pretty
cat
much a
had
cold
COVID,
that needed an
basically.
antibiotic,
Did
right?
you put a little mask on him?
Well, $4,000 later, $4,000 later, the cat just got prescribed some antibiotic, and it was okay
And
after a few
everybody's
days.
okay. Yeah. It's
Wow.
amazing. I'm telling you. And then they try to sell you the
I still
pet.
haven't recovered from that yet.
The pet insurance they try to sell you?
Yeah, it
never
doesn't cover
works.
anything.
They always say it's a
all
pre-existing
condition, right?
Oh, your dog's hungry.
Hey, well, that's just
pre-existing.
another reflection of inflation, is these
Yeah.
high vet bills.
And actually, I talked to a vet because I just took my cats in too. We're in the cat club in this place. Anyway, and the vet was talking about how their cost has gone up so much that now they're passing that cost on just to like everybody else, right? I mean, when things go up, you're passing it on. And it puts a big problem for a lot of people. Now, we were talking about the Republican National Convention.
Instead of spending money on the pet, maybe we should just put that money into some gold.
There you go. That's what I'm saying.
Yeah.
What's going to deliver more to you? Fido
Well, I mean,
or some shiny gold coins?
love we're going to get from our pets, but,
That's true.
financial stability.
Look, you can hug your gold if you want to. Now, at the RNC, the DNC, both in the rearview mirror now. We're moving full throttle into election
full speed.
season. One of the ideas that was handed out this week at the DNC was from Kamala Harris, who tackled a problem that's real. And
You're
she said
kidding me.
it's very difficult for people to get in the housing market, right? It's
Okay.
very difficult for first-time buyers to get in for the first time. This is all true. That's true.
Not these congressional members that are worth hundreds of millions
No.
of dollars. They can get in pretty easy. Okay, go ahead.
Yes. Well, she says a good idea is giving each new homeowner, first-time buyer, $25,000. Now, I know all my
It's a
friends
heck of
have
an
done.
idea.
They say that sounds great.
Yeah.
But my question is, where does that money come from? And then what does it do? We're going to be printing more money again to hand people $25,000. And then guess what, Ken? I'm no expert here, but housing prices will just go up another $25,000.
Well, it's just promises for votes, Jen.
I guess so.
Promises based on printed money to say, to try and buy votes.
Yeah.
I mean, what else? Look at the forgiveness of the student loan program.
another one.
Wasn't that just a plan to try and win votes? So let's all make these promises that none of us are strong enough to keep, or, it's not going to benefit the real American or the everyday guy that's trying to work and save and, invest and do the smart thing. We all know how that's going to end, and that's the trend.
Yeah.
Since 1971, no one's going to talk about that prices have gone up 3,000% since 1971. And even today, all they talk about is, well, inflation is pretty much at its lowest point. Are you serious?
Which, by the way, is so crazy because interest, you've taught me something, interest compounds. So
Right.
just because they say inflation, not interest, inflation is at 3% right now. Well, first of all, it was 1.5% under Trump. It's at 3% now, but we've, in the Biden administration years, seen it go to 19% because it compounds.
Yeah,
So-
it compounds so
Right.
that the rate of inflation from time to time is going to slow. But when the rate of inflation slows, now what are they talking about? They may want to lower interest rates, right?
Right.
And that means that they're going to try to juice up the economy falsely and do these different programs to inject liquidity into the system. So before you know it, we'll be headed higher again with the inflation rates. And the percentage of inflation rates. Inflation has not been beat. It's not under control. So the protection of your dollar is more important today than ever, even if gold is at $2,500.
So this is where I want to go with you because you touched on it in the last segment. but I think we need to really underscore it for people who are hearing this for the first time, who know inflation is a problem. How can gold and silver, how do precious metals act as an inflation buster? Because truly, when you separate yourself away from the system, you give yourself that control back in a tangible asset that has gained value over time. But let's really talk it through to people who want to look at this as an option.
Let's do like a little history lesson.
Okay.
The price of gold in 1971, $30. Okay. The price of gold in 1980, after we had a huge inflationary period and an energy crisis, $800.
Wow.
So it went from 30 to 800
That's
in the
a jump.
1970s to 80, okay? Then the next 20 years, gold did pretty much not too much of anything. It kind of just pulled back and reset and went down to $250, $350 towards the late 90s as Wall Street became the premier place to try and invest. And computer programming became very, very popular. And actually, computer programming has aided in the ability to suppress the price of gold and silver because everything is controlled by computers and algorithms today more than ever. And they do use those things to manipulate markets. But the price of gold at the 2000-2001 time frame was about $300 to $350 per ounce. So if you look at the great financial crisis of 2008 period, and then if you look at today, gold has gone from about $300 to $2,500 in the last 20 years.
That's huge.
Well, that's a factor of over 8.
Yeah.
8 times. So if you had $1 of gold 20 years ago, you now have roughly a little more than $8 of gold. And if you had a dollar bill 20 years ago, you have probably about 50% buying power of what you had 20 years ago. So if you put $100,000 into gold and you just let it sit there 20 years ago, and you had $100,000 of cash that you just let sit there, one investment, the gold would be worth about $800,000 of gold, and the cash or the bank deposit or whatever with the little interest would be worth a little bit more than $50,000 or $60,000. So $800,000 versus $60,000 of buying power is a big difference. If you take a factor of 8 and multiply it by 2,500 today, that's $20,000 gold. And if you look at the next 20 years and everything that's gone on, if gold simply does the same thing that it's done in the last 20 years, it's $20,000. So is 2,500 too high? No. So you have to ask yourself, are we headed down the same path? Are they going to continue to print money? Is our dollar going to continue to lose value? I actually think that gold is in a special period here over the next 10, 15 years, and we may actually see a price even higher than that. So we'll have to see. So to answer your question, Jen, at $2,500, it's not going to be a straight line, and it could pull down a little bit in the short term, but that doesn't matter. If you hold gold for the long term, it will show the price depreciation in our dollar at a higher price. And in my opinion, $10,000 or $20,000 for gold over the next 10 to 20 years is extremely likely.
And what's interesting about this, too, is when you're talking about wealth creation and wealth preservation, this is a place to put some money for wealth preservation. This is not the fast returns that you're going to get from the stock market or from whatever, pick your poison.
Yeah.
This is something that you put some of your money in over time so that you let it hold its value, so that you have that same value that you put into it, right?
That's the way to look at it.
Yeah, I mean, this is the safe bet. This is where you kind of hedge your bets a bit and put some money aside that's going to be there for you in the future, right?
Yeah,
this
something
is
that just can't,
preservation mode.
It's not connected to the electrical grid. It's just not going to be nationalized by the government. It's stood the test of time.
Private still.
People have to remember that every fiat currency, Jen, in history has failed. And that may mean a default, or it just may mean hyperinflation where the value comes close to nothing. So in this particular instance, gold is more important than ever. It is an inflation buster. It is many other things, but today I just think that it's more important than ever.
All right, so you heard Ken Russo right here. Call Midas Gold Group today. Veteran-owned, America First Patriots, 855-322-GOLD, 855-322-GOLD, 855-322-4653. Also, check out the website for product catalogs and resources, MidasGoldGroup.com. MidasGoldGroup.com, 855-322-GOLD. Thanks for joining us. It's a Gold Standard Radio Show with Ken Russo and Jennifer Horn.